So we had a very strong January. The month of February tends to be a bit weaker. So seeing the market kind of slop around here after this very stellar run that we've had ever since last November, a month or so of the market kind of grinding sideways, not doing a whole lot, would not be surprising at all at this point. But here's what you need to know before the bell on two fronts this morning. On the stock market, of course, selling off yesterday. We are very close to triggering that MACD sell signal again. And again, this is, back at a fairly high level. We never really worked that off much. We did have a good reduction in some of that overbought reading yesterday. Futures are pointing higher on the S&P this morning, so we may see some buying coming in. Again, the market's approaching this 20-day moving average, so we could see some buying, kind of some bottom fishing coming in this morning after that sell-off yesterday. But I don't really expect it to hold up. Likely could get a little bit of a rally today, but most likely we're going to sell off a little bit more here over the course of the next few days. Probably retest this 20-day moving average. That's going to be very important for the markets to hold. If not, we're going to be testing the 50 below that pretty quick. But that's going to require a bit more selling in the markets, and that is also not uncommon for the month of February. So we had a very strong January. The month of February tends to be a bit weaker, so seeing the market kind of slop around here after this very stellar run that we've had ever since last November, a month or so of the market kind of grinding sideways, not doing a whole lot, would not be surprising at all at this point. So keep a watch on that. Again, the sell signal is going to be kind of a good indication. Again, that doesn't mean the markets are going to crash just because you have a sell signal. It just kind of means the market's going to grind around a bit and not really make a lot of an advance in the short term. On the other side of this, though, was bonds yesterday had a very good day because of two things. One, we had the Treasury coming out announcing what their next issuance is going to be, shifting duration that was very favorable to the longer duration bonds. At the same time, the Fed's actions yesterday, sell off in the markets, put money into more kind of that safety risk-off area of the market, which is long-dated treasuries. Bonds popped back above that 200-day moving average, took out all the resistance that was building up above that, cleared that yesterday, triggering a MACD buy signal. So we've now got kind of clear room here for interest rates to come a bit lower. Interest rates broke below 4% on the 10-year Treasury yesterday. So we're now going to try to re-challenge, most likely, this 100 level on TLT, again, kind of retesting those recent lows in interest rates. But again, after a good kind of a reset, after that big run we had this correction, market kind of reset. So now we've got a nice trajectory here to see potentially lower rates on the longer end of the curve here over the course of the next few months. Again, this is going to be a while as we're working through this, because inflation is likely going to stall here a bit. This decline in inflation that we've had is likely going to stall. That's going to keep interest rates somewhat contained, probably between 3.5% and 4% here for a while. But once you start getting into much slower economic growth, either later this year or next year, then that's where interest rates will fall. And of course, as the Fed starts cutting rates, these interest rates, and of course the inverse of that is bond prices, will go substantially higher. That's what you need to know before the bell this morning.